Welcome. It's earnings seasons, and today we're talking about Havells, a big leader in the electrical and wires space, and of course in the ECD space as well. Q3 numbers is the reason that we're talking to the management today. And before we get to that conversation with Anil Rai Gupta, Chairman and Managing Director at Havells India, a very good morning, Mr. Gupta. Quick recap here on the numbers so far. On the face of it, a bit of a muted quarter for Havells. Revenues are up 7% year on year, EBITDA up 2.1%, net profit up only about 1.6%. Margins have seen a bit of a hit at 9.8% versus 10.3%. Now, let's just get a sense of where we're seeing that weakness. Mr. Gupta, let's begin with that spot. Are you seeing muted demand, and where is that pain point coming from? Are you seeing rural demand muted?
Well, so overall, as you can see, we have 75% of the business coming from B2C and B2B business about 25%. We do see a very strong pull from the B2B segment. Even on the B2C side, actually, if you break it down, we are seeing some muted growth coming in from the B and C class towns in the rural areas. But overall, we are quite satisfied because, if you see products which are like electrical consumer durables, if we take out the fans high base last year because of the energy rating change, we have seen good traction in appliances. We have seen good traction in water heaters. Even lighting, consumer lighting has also grown significantly on volume basis. It has degrown because of the value erosion for LED raw material, but otherwise volume growth is strong. Even in the switchgear segment, if you break it down, the residential and consumer demand has actually been strong because residential sector has been doing well. We've seen some weakness in one particular area. Overall, because for summer products, this is not really a consumption quarter, and it is more of a channel shelf filling quarter. We are expecting that the fourth quarter we will see revival in the demand because of many factors, and this is the reason because of these factors that we see a little bit of a muted quarter in the third quarter. On the margins front, actually, if you break it down, we are seeing improvement in all segments, including Lloyd, switchgear, lighting, ECD. We're seeing margin improvement in all segments. It's just that the third quarter we use, it as a long-term investment base for advertising promotion, where we actually increase the spends quite high because of the World Cup, the festive season, the incoming summer season. But we do believe that, once this is normalized, the overall EBITDA margins will also start improving.
All right. Let me just go through that one by one. You talked about demand in residential being robust except for one segment. Can you just elaborate on that, on the kind of demand we're getting, and in what segment of products? Are you seeing higher end premium products in greater demand and higher margin products? Just give us a clearer picture on what's happening on the residential end.
On the residential side, we actually see improvement in the premium segment, and that is also because of the fact that we are seeing more robust growth coming from A-class and urban towns, and a little bit of muted growth from the B and C and rural areas, where the not the very premium products would be going. Also, within the switchgear business, we are seeing high growth in the B2B segment, and the B2C segment, even in the urban areas, we are seeing decent growth. Where we are seeing some slackness in demand is where we supply to the telecom sector, where the capex cycle has been a bit low in the last 1 year. But otherwise, generally speaking, we are seeing a recovery in the premium products. And once the B and C class towns in the rural areas demand starts picking up, we'll see overall growth in those segments.
When do you expect your B and C class town demand to pick up, and why do you think that will happen in quarter four?
Yeah, if not quarter four, in the coming quarters, but over the last couple of years, we've actually seen quite high volatility in raw material prices, and that has actually started stabilizing. We've started coming down as well. But the high inflation impact in the last couple of years because of the raw material increases has actually impacted the demand in the rural areas and the B and C class areas, where we, as I said, that the raw materials are abating, in fact, sliding down, which will not only help margins improve, but also the fact that the smaller areas will also start seeing traction and growth in the coming quarters.
So do you have a timeline by when do you think that will kick in when you say coming quarters? Anything more specific that we can go by?
As I said, because there is a latent need there, and uh, the consumer may have deferred the purchases. So maybe fourth quarter in the coming financial year, we'll still start seeing some improvement there as well.
Let me just come to you on the ad spend. So about 4% of your revenue, and as you said, this is an expensive quarter because you had the big events, etc. I want to get a sense from you on the kind of return you're expecting from these ad spends, or the kind of returns that you have seen, or the kind of impact you have seen in the past, and what the rationale is for this bump up in ad spends.
Yeah, I think generally speaking, every company is looking for higher market shares, and higher market share also depends upon higher brand recognition and the consumers' top of the mind awareness. So that's advertising spends, and the BTL spends are generally a constant investment which keeps going to improve your market awareness or brand awareness, and that's an ongoing activity. As you mentioned, that it's a 4% spend in this quarter. Our normalized spends are between 2.5% to 3%, and we expect this to continue in the coming times.
Okay. Talk to us about your facility, your new facility, which is going to, I think, kick off in March of this year. Is that on track, and what kind of a revenue contribution do you expect from there?
We expect that the revenue contribution will start coming in the coming financial year, and hopefully in the cables business, that should increase our capacity for the industrial cables by at least 25%.
Okay. Just an outlook that we can get from you, sir, on Lloyd's. Now, you've acquired this company about 5 years ago. What is the path to break even? Are we seeing loss reduction at a slower rate than expected? Can you just give us some clarity on what's happening with Lloyd's?
It is a long journey, and because it's almost the industry of large consumer durables is almost as big as the complete electricals industry. And we want to be a meaningful player. We do see that there is a position for a player who can become a meaningful player, a complete gamut of large consumer durables, not only ACs, but washing machines, refrigerators, panels. And here we are investing heavily in terms of increasing our market shares. Over the last couple of years, we've seen more than a 35% CAGR growth in our market shares, and also growth in market shares. So that's an investment we are constantly building in distribution and brand enhancement, and manufacturing and R&D. So, but on the other hand, there is a lot of cost initiatives which are happening in the company on the product side, where we are improving margins. Even in the third quarter, where it's a low quarter for air conditioners, we've seen margin improvement, which augurs very well from a margin standpoint in the coming financial years. But the bigger game here is to be a meaningful player in this large consumer durable category.
To that extent, I believe there is a new manufacturing facility in Rajasthan on the anvil. Can you just give us a bit of color on where you are moving and the strategy to increase presence in the consumer durable space?
We have two manufacturing units, one in Rajasthan, one in Andhra Pradesh, already for air conditioners and washing machines in Rajasthan. We are evaluating more product categories to be added into this, and it's under evaluation at this stage.
Okay, so the news about refrigerators is something that is adding to this is under evaluation.
That's right.
All right. Let's get an outlook from you, Mr. Gupta, on what do you think are the categories that are going to fire for you in the coming quarters. You talked about this not being a good quarter for fans, etc. Do you see that reversing? Do you see lighting coming back perhaps on the base that there is? Can you just give us a sense of that?
Yeah, I think we are expecting a very strong summer season for both fans and air conditioners. We do expect these products to, be higher than the overall average of growth. Lighting, as I said, there was value erosion, which is now sort of stabilizing. So we do believe that the volume growth which is happening in lighting will continue to give growth to the lighting business. So overall, I think these couple of product categories will definitely be higher than the normal average, but also we are expecting good growth in switch gears, cables, other products as well.
Mm. Just last point, we're speaking a little before the budget. I know it's a vote on account, but it's an event that everyone is looking out for. As industry, I want to get your sense of what you hope to see in terms of direction from this budget.
I think generally speaking, we are, as an industry, the way progress is happening, the way investments are happening, I think in the country, I think as long as we can keep this track, we'll be happy to see that.
All right, thank you so much, Anil Rai Gupta, the Chairman and Managing Director of Havells India, speaking with us on the numbers. Higher ad spends, especially during the World Cup and other such events, is perhaps what has compressed the margins, but he sees a recovery from there on, including in rural demand by Q4 of next year. Thank you so much.